the budget that the White House has proposed, and obviously the one that is currently leading us probably down the path toward a government shutdown. We'll see. That's JT's wheelhouse, but that number is about $400 billion larger as opposed to $64 billion larger. So, we'll see where we sort of shake out there. But, interestingly, just some big picture numbers, because I think everybody becomes sort of like desensitized. But, if you look out over the next 10 years, at least based on what's already in the numbers, not even these more aggressive White House spending proposals, the deficit over the next decade, so from 2024, again, that begins in about 9 weeks, the deficit from 2024 through 2033, so the next decade, is projected to run at negative 20.3 trillion. So right now you've got about 32 trillion in debt outstanding at the federal level. Roughly 25 of that is held publicly. So that public debt piece is going to grow from around 26 trillion up to, on a projected basis, 47 trillion. And that assumes no recession in the next decade, and also assumes no other exogenous shock like a war or a pandemic or anything like that. So just, steady state business as usual, kind of best case scenario in a lot of ways. The debt is going to grow to 47 trillion by 2033. So, I was just thinking about, reading your early look on gold and the idea that, from a longer term standpoint, nothing's really changing here. If anything, the trend that we're on is accelerating. And one other just sort of brief call out within this is that, on the interest side, so if we look at the next 10 years, the amount that's budgeted to be spent on defense, the number's around 10.3 trillion over the coming decade. The interest side, net interest, that's going to be sent out, assuming, these rate assumptions, which I don't know that those are right either. But over the next decade, as a country, we're going to spend 10.6 trillion on net interest expense on the debt that'll be outstanding. So, more than the defense budget on net interest over the coming decade. So that seems pretty remarkable, pretty notable as well. But anyway,
that's the so just to have that right. I mean, so we go to 2033, which, by the way, is right inside the leather. Never mind, assuming there's no recession. That's ridiculous. But it's right inside the leather on the timing of the fourth turning. And maybe this is the point, right? I mean, you get 47 trillion debt bomb, and you said 10 trillion, that's over a 10-year period, 10.3 trillion in interest rate payments, same duration.
But by the end of the decade, by 2033, the projected net interest expense annually is going to run just inside of 1.5 trillion a year.
Yeah. Okay. So this is actually, as opposed to listening to like some farmer named Jim on CNBC about the economy in the future, maybe entertain Stan Druckenmiller's views. It's actually somebody who's called a recession after being bullish, sounds familiar, and then made money during recessions. I mean, Druckenmiller's as good as anybody on the planet on this. And he is way more bearish than us, Steiner, on this topic specifically. He thinks bond yields, he's got more of I think he says the U.S. is going to become an emerging market on the deficit spending and debt interest payment scores.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.